Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, May 12th. We did get a little bit of a pullback, very quiet trading day on Monday. Markets just kind of gapped up and kind of gave back a lot of its gains in the morning and just kind of drifted lower throughout the day. Now, what we want to see is we want to see if we're going to get some weakness, and we are getting it in the pre-market. Bonds are selling off yet again, triggering a sell-off in equities as well. Kind of confusing, but nonetheless, that's what's going on. We are down in the pre-market in the ES electronic session, about 12.5 handles. So we just like to see this market pop, and then that case, then we can start looking to sell short. However, being down so much, we have to let the market reset itself. Hopefully, the market can drift a little bit higher before the market opens in the New York session at 9:30 a.m. Eastern Time. So I want to look at a few things. We're going to continue to look at the bonds, and I mentioned bonds were weak and they were selling off, but you don't want to be short in the whole bonds, obviously, and we've been pretty much selling off continuously for the last couple of weeks. So I'd like to see a bigger bounce before we look to get in short. And what do we want to look at is technology. We want to continue to look at the banks and financials and, of course, our indices. So let's just get right to it. We have the XLK in front, technology ETF, and as you can see, doing quite well. It actually did well yesterday. And I'd like to see this 43.50 get taken out. If we can see that get taken out, then I could see us making some higher highs and higher lows with new money coming into this sector. Now, as you know, the banks and financials, we haven't gone really anywhere, but they are holding up pretty good. Remember, yields rising, it's good for their bottom line, the banks. And with the Dodd-Frank Act in place, the old Glass-Steagall Act, their trading business is pretty much over, and they have to go aggressively lend the old traditional way. So that's going to put a bid into the banks and financials. Of course, if the markets really get crazy to the downside, everything gets sold into. But I think that's going to be a good time to start looking at some of these bank stocks, okay? And even the home builders, because that's going to affect also some of the housing sector, right? I mean, if the banks are going to need to aggressively lend, that's going to, and rates are rising, and people that are sitting on the sidelines just waiting for rates to drop even more. Now they're not dropping, and the Fed starts looking to cut rates. It's going to push these new buyers into the market. So keep an eye on those home builders as well. You know, the XHB ETF, you can look at that and see what the holdings are in there. But Lennar, Toll Brothers, TOL, you know, you have DH Horton, DHI. So there's a couple of good ones that I like that I'm going to be looking at aggressively when I see the market kind of stabilize a little bit. So I mentioned yesterday that I think we're in a small correctional phase. We really haven't seen that. But I think this week, if we start getting some lower lows and lower highs, and that's going to really give us an idea that a local top may be in place, and then that we can start looking to sell rallies intraday. I do think that that might happen. I mean, if we are weaker this morning, and if we continue to stay weak, nothing's going to go straight down or straight up, obviously, but if we can get markets to give us a good definitive idea of now the trend is down instead of up, that's going to be a really good factor. Now, Friday's low is going to be important for me anyway, and that's going to be in the, let's take a look at the spiders here. Here we go. Friday's low, which would be absolutely, well, we got taken out Friday's low right here, and this is Monday, so the spiders took it out actually. So this is going to be important if we fill the gap here. All right. So this here, to me, that the markets actually trended lower yesterday and took out the low is really of significance, because if we can continue to move low when we start breaking down this area, the next target would be, of course, would be fill the gap, and then this lower trend line, uptrend line, going into this ascending triangle. So remember, we've been in this triangle pattern formation pretty much most of March and April, and again starting in May here. So we really need to break down here. But I think that the next time it gets down there, it will break. Again, not always just moving in one direction, but you know, you get some choppiness here, and then I think it does break. And then the next step would be that 200-day and the lower trend line, horizontal trend line support here, right around the 204.63. So yesterday that got taken out. I didn't see that in the chart last night. It's interesting. I think that is going to be of significance, that I think the market are going into a correctional phase, and that that the markets are a little bit in trouble. And I think that with bonds breaking down, you would see more money coming into equities, and I believe that has been the case since the markets, equity markets, let's call the S&P, has been bouncing around. It's anywhere from like 2170 to 2100. I'm sorry, 2070 to 2100. So that's interesting. But I think once all let loose, meaning that markets are selling off and investors, longer-term investors, money manager reallocating their portfolio, I think you'll see a little bit faster move to the downside. So let's keep that in mind, guys, as we're trading. All right, might not want to start picking up any of those longs at the moment. I think you're going to be able to buy them a bit cheaper here. Now, TBT is the inverse short. You want to you buy this to short bonds. And as you can see, yesterday bonds were in trouble yet again, and now we're testing this 200-day moving average. And remember what I said, guys. If we start looking at this area, we take out this high. Look at these volume zones. If we have a big thin zone right here, that means that'll easily could flush up to the next target line of somewhere around 60. So I'm looking for bonds, if they can at least bounce for a little bit. If we can get that to bounce and then move higher, then I think I would love to short the bonds and look to buy some equities, okay, some strong equities, all right, meaning banks. Here's the Russell, as you can see, had a big gap up and then actually gave it all back yesterday, and that was that slow grind move yesterday. Terrible trading environment yesterday, and Friday, obviously, when we gapped up on Friday, really the markets gapped up. All of its gains were at the opening, and then we just kind of just drifted lower. So let's take a look at here and see if we get to fill the gap. But again, secondary leader here in trouble. Here's the transports in trouble, as you can see, and this is, I believe, that canary in that coal mine. If we really start to break down hard and transport sell off, I think it's going to take it all down with it, guys. So be careful. Maybe want to buy some protection. Yesterday, the put call ratio was very bullish, to say the least. And if that's a contrarian, I think the markets are in trouble. I like to see the put call ratio really start to rise above 1, right around the 1 area. And if that does happen, then we could maybe mark a bottom. But as of right now, we're not seeing that here. I think ATR is starting to rise higher, meaning that there's more volatility coming in, and that's a good measure, a good measurement of gauging risk on and risk off. Diamond, same thing, as you can see, gap down here, really kind of took it on the chin, and it's already at the 20, all right, barely at the 50. So if we lose this uptrend line here, then I think, again, this is going to help fuel more selling into the marketplace. And lastly is the Qs, the XLK managing a little bit better than the QQQ. But again, the technology actually been holding up pretty well in the last year to year and a half. So hopefully that might be the trigger as well. Okay, so just keep that in mind, guys. Pay attention to what bonds are doing. Bonds very, very important right now. They've been really coming under some pressure. Remember we've been in a bull market in bonds since 1981, and I think that may be coming to an end this year. So I want to be watching bonds closely. We don't have any really economic data. We do have one of the Fed members speaking, I believe, this afternoon, so check the calendar on that. And then we have the API crude inventory numbers that comes out this afternoon, and that's about, I believe, 3 o'clock in the afternoon. So if you are holding some longs for oil, keep that in mind. And let's see what happens today. But again, very important. Watch what the volatility does today. And I think that if we continue to sell off and close pretty much at or near the lows, I think the markets are in trouble, and we might have carved out a local top here. Have a great day, guys. We'll speak to you tomorrow. Take care.